Today's earnings had logistics centers abandoning the utility grid just to keep their forklifts moving. Plus, healthcare platforms voluntarily killing their own weight loss products to dodge the government. And miners printing billions while actually digging up less rock.
It is basically a batch of businesses hitting hard external limits.
From the reports closing out Monday, May 11th, we analyzed a group where the financial reality is completely hiding the physical scrambles underneath. The headlines look fine, but underneath it is all grid bypasses, deleted revenue, and paper illusions.
The grid bypass story is probably the most physical limit we saw today. We're looking at Plug Power here. They are actively pitching local hydrogen fuel cells to distribution warehouses, not for some green initiative. The warehouses simply cannot get enough utility capacity to charge their electric forklift fleets.
Because nearby AI data centers are sucking up the local power.
Right, the downstream data center tax. So hydrogen becomes a physical necessity for these businesses. It's a great demand logic. But financially, the quality of Plug's quarter is rough. They are burning $150 million in operating cash right now.
And they desperately need to close they just need this massive data center land sale to clear by June to avoid a liquidity wall.
So that is a physical limit. HIMS and HERS hit a hard regulatory limit.
They intentionally deleted their own gray market revenue. They took a $33 million hit to kill their compounded GLP-1 weight loss business.
Which was a highly calculated move to step away from intense DOJ and FDA scrutiny.
Yeah, but here's the earnings quality trick. To hide the impact, management just redefined their adjusted EBITDA metric. They literally stripped out that $33 million write-off so they could artificially report a $44 million positive quarter.
It's just carving out the painful realities. They amputated a limb and told investors they lost weight.
Okay, speaking of hiding realities, Barrick Mining had an incredible macro bailout. They saw double-digit drops in physical gold output, and they paid millions a month just to freeze a Pakistani project due to local unrest.
But when spot prices hit $4,800 an ounce, the poor execution does not matter. You generate over $1.5 billion in free cash flow anyway. The macro pricing luck completely masked the physical reality.
So looking ahead, we really need to watch if Plug can close that June land sale to stay alive, and whether HIMS can actually replace that deleted GLP-1 revenue with their new Australian buyout.
Exactly. You have to watch the physical operations, not just today's adjusted headlines.
For sure. The individual company episodes have the call-by-call details uncovering today's regulatory actions and structural accounting tricks. Thanks for being here, Miro.
Talk tomorrow.